Hey everybody, Chuck Barone here. Friday, February the 24th, 2023. Here to wrap up a week, a crazy week. We expected this. We kind of told you guys what to expect. We knew it was going to be a big finish, and we got exactly what we expected. We knew yesterday's news was going to be a jolt to the markets, either for the good or for the bad. It turned out to be for the bad. And we knew we had a lot of consumer information coming today, which we got, and also turned out to be, even though it was positive news for the economy, I guess, not great news for inflation, not great news for the future of rates and rate hikes, spooking the market like crazy. So here we go. Anyway, forgive my casual attire today, guys. It's rainy and friggin' cold here in Vegas. Winter weather. I was hoping to be in a polo by now, but apparently that's not to be. So forgive me for the casual. Anyway, before we start the show, as always, I just want to welcome everybody to the show. Thank you again for your support, for watching the videos and everything you guys do. We appreciate your support more than you know, guys. Markets today finishing a bad week, not great. I think pretty much everything was down today except oil. You had the stock market just not taking the news well, and we'll get into all the news after. But the Dow down 336 points, S&P down 42, NASDAQ down 195, basically a rout. Market started down, had just a couple of little tries that rallied, but there was just not a lot of support there today. Market spooked, and they should be. Bond market also just dumping today, yields spiking like crazy. So you got the 10-year jumping 7 basis points, 3.95%, going to test 4% any second. The 12-year up 12 basis points, 4.81%. Not a good day for bonds, not a good day for the people holding bonds, that's for sure, because these rates, this is kind of what we were expecting before this big fake rally that came, this big head fake, and now we're, the 10-year looking like, remember it broke through 4%, like 60 days ago or so, and I thought it was going to stay there. It's rallied like crazy since then, was down as low as in the 3.4s, now jumping right back up. And these markets are moving big. I mean, to see a half a point move in a bond market, it just usually takes a long time. It's the tortoise. The stock market is the hare, and it's just crazy watching the way these yields are jumping around day to day on just the crazy, any little bit of market news, boom, here we go. The dollar today with with this economic news up big, well, not really up big, but up over half a point, 105.22 on the index, gaining steam. The dollar's the strength right now, with the U.S. economy going guns the way it is, and the future of interest rates now looking like they're going to continue to go up higher than we anticipated. Now the new anticipation is already a half a point higher than the old anticipation, and I'm guessing before it's over, there'll be another new anticipation coming. Markets today, metals. Not a good day for metals with the dollar rallying. You know how they work inversely, guys, right? If the dollar is strong, typically gold and silver are not going to be. Vice versa. If the dollar is weak, gold and silver are going to be. So with the dollar rallying again, the metal market, gold and silver at least, continuing their decline, with gold down $10.60 to $1,811. Silver down 57 cents, $20.75 per ounce. I think metals really want to rally, but in the face of this dollar and the news we're getting, the dollar is probably going to continue to strengthen. So now the speculators and futures driving the price of gold and silver down. Oil today, the only thing that rallied, right? So oil was up, but it didn't quite get what it lost yesterday. It was down to $1.61 yesterday, up $1.21 today. West Texas Intermediate at $76.60 per barrel. Still in that trading trough we've been watching between 75 and 80. Not much there. Bitcoin today with the strong dollar also down pretty good, down $743.60, 23,220 for Bitcoin. Still actually, in my mind, holding up pretty nice. News you guys need today. Let's wrap this week up with all of this, right? So, top line news today. PCE, the personal consumption expenditure index, the Fed's main gauge of inflation, shooting up 0.6% just from last month. Not a great thing on the market today. The top line, PCE, now sitting at 5.4%. Last month it was 5.3%. Not good news. I was talking about this yesterday. I thought there might be, and I've been saying that nothing goes in a straight line in these markets. The idea that the Fed was just going to continually see this inflation rate go down, down, down without any interruption, I thought was a pipe dream. Here we see it happening. I just talked about it yesterday. I said there might be a surprise in this index, and here it is. So now, even excluding food and energy, core PCE, personal consumption expenditure, something like that, rose 4.7%. So it also was up from December, 4.6 in December. So now we're having the first time we're seeing inflation numbers actually going up. The Fed has managed to, even though the December decline was small, basically down like the 0.1 they're gaining back this month, it was showing that the Fed's rate hikes were losing their steam, losing their effect. It showed that the pace that inflation was declining was slowing. Now we got a little bit of reversal. I think that anything could happen now, guys. You could see, and everybody's been anticipating this quarter-point rate increase, and we'll talk about rate expectations and how they've changed. But, I wouldn't be surprised to see the Fed somewhere, soon, if not this very next meeting, the one following it, bump another half. Just to get the market's attention. Make sure everybody understands how serious they're taking the inflation thing. And I think that would also not be a terrible idea to check some of this greedflation, where companies, even though now the prices of to produce aren't really rising so much, they're raising their costs anyway, or they're raising their costs exorbitantly above what their increases actually are. So shocker to the upside on inflation. It's, the bad news is this, markets have overreacted to every little bit of news. So now here come the people who were yesterday looking for a pivot. Now today are ready to just bury the economy and we're all toast. We need to find a little bit more level-headedness than that, right, guys? We don't panic, we don't freak out, we don't overreact to anything. These are the kind of setbacks that should be expected. I was talking to a friend today and he was talking about his money, and he said, what should I be looking for? What should I hope for? I said, what you hope for is Treasury rates go to 7%. And then you just lock in your 7 and you're going to double your money in 10 years. You got no risk. Get out of this crazy, because these markets are just bananas right now. And until the Fed finishes this cycle, however it finishes and however long it takes, these markets are going to be crazy, uncertain. The other news we were looking at today, we knew that we were going to get this inflation number, but the news we were really looking for was consumer spending and income. How are consumers doing? Are they making more money? Are they spending more money? We know that there was a decline in consumer spending in December. So there was a big concern that was the start of a recessionary cycle, with consumers spending less. And, they're a huge part of our economy. Around 70% of the economy is consumer spending. So here come the numbers. Consumer spending jumps at the fastest pace in nearly 2 years. It jumps shooting up 1.8% from just last month. Last month, December, was revised upward, but still was a decline of 0.1%. So this is a huge jump from basically flat consumer spending to the biggest jump in 2 years. The forecast, they were expecting a gain. They were expecting a 1.3% gain. So this coming in is way hotter than they expected. And even after adjusting for the inflation, it was still up 1.1%. Also the biggest gain since March of 21. So here we go. Consumers spending money like crazy. Now we know incomes shot up, okay? So here we go. Wages jumping 0.9% month over month. Big jump. And we know the Social Security recipients, I think there's 60 or 70 million of those in the U.S., they all got an 8.75% increase in their Social Security checks. So we knew there was fresh money coming. We knew wages had been gaining some steam. We know that's been the Fed's biggest boogaboo, right? That's what they've been doing everything they can do to try to get a handle on. They've been talking about hot employment, and what it's doing to wages. So now we're seeing the fruits of all of that. So wages jumping, Social Security jumping, and consumers having the opportunity to having more money to spend went out and spent it with an abandon. And I'm guessing when we see the the consumer debt numbers, we're going to see a pretty big jump in those consumer debt numbers, right? Crazy. So here's what consumers spent money on. People bought, last month they bought cars. They bought household appliances, equipment, and furniture. So people were, spending money on the consumer and durable stuff that had been not doing so well. The price of goods continuing to decline. Services are the big advancer. And people spending more money on entertainment, on recreation, on dining out, which tells me the economy is not in terrible shape, although, that could change any second now, right? But, I was talking yesterday about the Harris poll and how negative all the consumers polled sounded. Well, I was like, wow, how do they feel so crappy in the face of this economic news, right? So look at it like this, guys. Home equity down $2.3 trillion in the United States. The average decline in 401ks last year, 20%, more than 20%. Stock market down, bond market down, prices of everything going up. While they're feeling poorer, the cost of everything is going at the same time. So this wonderful economic stuff we're hearing here, which is going to cause the Feds, and I'm going to close with this rate hike expectations. I can understand why consumers are feeling gloomy with that kind of, that's what they're sitting on. So they don't really care that people are spending money on cars. They don't care that they care about the price of eggs. They care about the price of butter, right? So now, negative consumers, which you would think would lead to less spending, the consumer savings rate jumps to 4.7%. So consumers now that's not a robust savings number by any means. But here in America, it is. So 4.7% savings rate, making more money, spending more and saving more. Yay, America. Now, to finish, rate hike expectations. So we've all been hearing, we all know any second now we're going to get a rate increase. Beginning of March. I think it's actually overlaps with the end of February of the meeting. So we know we got a quarter point bump coming. That will get us to about 4.85%. We know we have another one coming next month, or is it? Yeah, March. And then we'll have one, they'll skip April, so May, to get that number to 5.10, which I was saying, people were expecting this one to be the last one. I said there'd be at least one more. Now they're lining up two more. So they're talking about actually raising rates now through summer. More increases coming March, May, and June, reaching 5.6% on the Fed funds rate, overnight rate. Wow, that would really be a massive inversion, you know. When you have a overnight rate at 5.6 and a 10-year rate at 3.95. That's mammoth, man. Anyway, so now I think the market coming to the understanding that this inflation fight is going to be a lot harder than they thought. The first time they're seeing it's not a straight line back down to 2%. This is the reaction. So next week, obviously now we kind of thought it was going to be the typical not much happening kind of week. But apparently it looks like it could be now because the market digesting this news on a Thursday and a Friday, having the whole weekend to plot, think about it, do some scheming with their friends. I'm sure next week's market open and into the week is going to be interesting. We'll see what data brings us next week. It's got, as always, just going to be fascinating to watch it all. People who've been listening to what we've been saying about investing cautiously, looking for high dividend paying stocks, if it's going to be stocks, are doing very well. You're saving more money. You're spending it more prudently. You're not suffering the big declines. People in high growth stocks are suffering. You've been paring down your debt. You haven't been adding on any new debt if you can possibly avoid it. You're hunkering down and being ready. If this recession comes, nobody's going to be more prepared than people who've been listening to what we've been saying are going to be. Anyway, guys, it's Friday, weekend coming. I'm looking forward to closing my mind off from this markets for a day or two. Well, probably a day, because Sunday I'll have to start researching up what's going to be happening for the week. But anyway, looking forward to a great weekend. I hope you guys all have a wonderful weekend. Enjoy the time with your family, your friends, and the people you care about. Get some rest and take good care of yourselves. As always, we'll be back on Monday to bring you guys the news you need. In the meantime, have a great weekend. Till we talk again, take care. Thanks.